Yeah. Yeah. Continue.
Other important ratios used by banks in financial appraisal, particularly in case of term loans, debt service coverage ratio DSCR. The debt service coverage ratio measures the ability of a company to use its operating income to repay all its debt obligations, including repayment of principal and interest. Gross DSCR is the most important ratio used in appraisal of term loan. Average gross DSCR is equals to net profit plus depreciation plus interest on term loan divided by repayment of principal plus repayment of interest on term loan. To arrive at the average gross DSCR over the period of repayment of term loan, the aggregate of numerator of all the years is divided by aggregate of denominator of all the years. Its interpretation is the ideal ratio is 1.5 is to 1.5 to 2. A lower DSCR may result in default in repayment of term loan. Similarly, if the DSCR is much higher, the repayment period may be shortened. Interest coverage ratio. ICR indicates the degree of comfort enjoyed by the enterprise in paying interest obligations. The formula to calculate ICR is equals to profit before depreciation, interest and tax divided by interest. Interest includes all types of interest, that is, interest on term loan, working capital, unsecured loans, etc. Different banks use different benchmarks for this ratio. However, the ratio of minimum 2 is to 1 to 3 is to 1 is ideal. The ratio may normally be lower in case of trading businesses where the profit margin is low, and it may remain low in the initial years of a project due to higher interest obligations. Next is financial gearing
Mm.
ratio. This ratio measures the total leverage employed by the business, meaning that the firm has used its net worth as a lever to raise outside funds. The ratio is calculated by dividing total outside liabilities, both current and long-term liabilities, by tangible net worth. Different banks have different benchmark for this ratio, which varies from 3 is to 1 to 5 is to 1 upper cap. Lower the ratio is better from bank's point of view. Fixed asset coverage ratio. This is used in appraisal of term loan. Fixed asset coverage ratio indicates the level of fixed assets are charged or available to bank against the term loan sanction. Its formula is fixed asset up as part of primary security plus collateral security divided by term loan obligations. Asset coverage ratio. Asset coverage ratio indicates the level of assets charged in favor of bank against the credit facilities availed by the borrower. Its formula is primary security plus collateral security divided by total outstanding credit facilities. Both FACR and ACR are used to judge the level of assets charged in favor of bank against credit facilities availed by the borrower and to know whether the loan can be recovered by realization of assets or securities in case of default by the borrower. Different banks use different minimum level of ACR or FACR.
Very good. That's all. So this much. Now you may be thinking why I took you through these pages. The reason is this is the shortest one I have seen regarding ratio analysis. And this is a must. You cannot avoid knowing about this when you go for the interview. Apart from this, say other questions, we will see some more questions that will be asked in the course of your interviews, like say, what are the different parts of balance sheet, etc. So please go through these questions. I think there are about 30 pages questions or so. I would like you to go through this and prepare your answers ready so that in the next classes, I will ask questions, you need to answer that only. So that this will help you in your subsequent mock interviews you'll be taking from me. So this is how the questions go. What is the role of credit officer? Why do you want to join this bank? Then what economics terms related such as recession? Honestly speaking, I don't think anyone will be able to answer this. Can anyone answer me this? What is recession? Recession अभी आंसर कर सकते हैं? बोलिए, निहारिका.
Yeah, I
निहारिका,
can try. Yes.
ट्राई कीजिए.
Recession is a situation where where the things are economy is slow down, as there are lack of jobs and lack of uh, money in the market. It is opposite to inflation.
Not bad, not bad, not bad. Good. See here, are you seeing on the screen?
Yes, sir.
A recession is a significant, widespread, and prolonged. These words you have to use. One, widespread, prolonged. That means long term. Downturn in economic. All other answers are correct. But only thing is, you must bring in it is widespread. That is throughout the country and prolonged. That means for more time. A common rule of thumb is that two consecutive quarters of negative gross domestic product growth indicates a recession. However, more complex are also. So I will give you this link in our what is that? Mm,
Yes, sir, this only.
Newspaper, na? Correct, only, correct. De diya. Please go through this and prepare yourself. Maybe tomorrow when we meet, 1 minute. Tomorrow class hoga because Sunday, na, I will be busy with my yoga and all that. 31. Tomorrow is 2/6. 2/6. 8 p.m. I have arranged the class for Ravi IDBI. Maybe 8:30 if you want, we can meet. Are you willing to come, Niharika, tomorrow?
Yes, sir.
8:30 p. What about
Yes, sir.
Ankur? Will you come?
Yes, sir, definitely.
Anyone? If one person, two persons come, it will be good. Rituparna, if you are possible, you also come. I am noting here what is this 8:30 p.m. tomorrow, credit analysis class. Okay. I will note it here so that we can discuss. Thank you. Thank you so much. Um, we are discussing very difficult things. Your interview will be very easy. We are now revising at the level of, say, a chartered accountant or, say, a level of MBA thoroughly. But इतना तो पूछेगा नहीं है because they know you are not having practical exposure. Simple banking exposure nahi. इसलिए they will ask simple questions only. Don't worry about it.
Sir, I
Niharika.
want to ask one question.
Yeah.
Sir, how to handle situational based questions like I have seen in your PDF, that in questions PDF they say they asked some situation based questions also.
But the boys are telling situation based, but they are not giving those situations. That is the problem. Many times
Yes, sir.
they simply say situation based, they are not giving. Only one or two times some candidates have given the situations. For example, in one interview, they have asked you insurance interview. You are in the office as an administrative officer. A customer comes and puts his gun on yourself, and he wants you to pass a claim for damage which is not covered under the policy. What will you do? This is similar to a question. Some um, robber comes and shows knife at you and asks you to give all the cash. What will you do? And for asking credit, we can ask very interesting questions like you are working as a credit officer, your manager comes and asks you to pass a proposal which, in your view, is not worth passing. What will you do? उसका तो आंसर कुछ नहीं है भगवान जान. That is what is happening in almost all banks. Many times proposals are considered based on recommendations of bosses. Bosses are ruled by their bosses, government. understand now I should stop recording because